Good afternoon. It's July 28th. It's 3:19 p.m. Eastern Time. I'm Rich Posson for Critical Point. We just had all the Fed talk come out here a little while ago, and we saw the intraday trading get a little volatile. But overall, the stock market seemed to like the Fed's talk about they're probably not going to make much changes on the interest rates. It's going to be a while yet. So what of interest rates? Well, here's a weekly chart of the interest rate of the 10-year Treasury note. Back in August, we made a call. Right at that week, we called the bottom and we said not only is that long term, but it's super long term. Interest rates may rally now all the way into next decade, with the idea any recession could bring interest rates almost back to that bottom of last year, and then they would just go up again. So we don't really see a sustainable super cycle bull market at interest rates the next couple of decades. But we just have to also acknowledge that it is a super cycle bull market. All right, so but it's just not going to work the way it has in prior generations and prior super cycles. We're not that bullish, but we are bullish. Now, inside of that, we have long-term trends, and we believe interest rates are probably going higher into near the end of this decade. Then we're going to have a recession and they'll then knock the rates down, maybe all the way down, and then we're just going to repeat that again next decade. Inside of that, there's smaller long-term trends. And what we did was earlier this year, back in, we started calling maybe in March, and then it was finally in May when we said, you know what, we don't want to go with a specific forecast of higher rates in August. We want to go ahead and say it's over, and then lo and behold, look at this drop in interest rates. They've filled this gap here. Maybe some will get excited about that. But our best forecast is this LT1 trend that you can see up from August of last year into the spring of this year is likely down into sometime next year. And it's probably going to be mid to late next year, not at the start of next year. There's just not enough time to get their selling done, to get the economics and fundamentals to switch from a bearish concept or emotional behavior, those kind of things, okay? So ultimately, looking out over the next couple of months or so, we could see interest rates recover some. Just do not believe interest rates are going to recover back to the high of this year. And ultimately, they would then slip back down to the current low here as of July, if not a bit lower. We may yet see a return of 1% going into next year for interest rates. We think this is high probability. But just keep in mind, eventually interest rates will probably turn into a sideways range into that minor long-term bottom, LT1 model bottom, next year. Then looking out to 2023, I don't doubt we're going to see interest rates move above this year's high. So that's our scenario on interest rates. We think the stock market will deal with this well, so we're remaining long-term bulls in the stock market. We think this might relate somewhat to inflation, and maybe inflation backs off by next year as far as the percentage, the rate of inflation. Okay, but it's probably not going back to zero. It's probably just going to go from the current 5 to 6% back to around 2 to 3% as of next year, and then it may pick up again by 2023. And inflation can be firm to higher this decade, but it's going to be more like the 1950s, 1960s. This is not going to be the 1970s. There may be at times similarities of 1970s. And in the 1970s, inflation will average 7% for the entire decade, okay? Well, we don't think that's going to occur this decade. It may average better than 2 to 3% this decade, and that's better in the prior decade or even 2 decades, but we just don't see the massive inflation and massively higher interest rates like some are trying to forecast. It just doesn't fit with us, even though we are actually long-term to super long-term bullish inflation and interest rates. But at the same time, we're long-term to super long-term bullish the economy and the stock market. Hope there's been some assistance, and if you're not a subscriber, it'll intrigue you to give us a try here. Try us for a few months. My guess is you're going to be remaining with us for the rest of this decade, because boy, do we have a roadmap for this decade, including perhaps a blowout at the end of this decade. At any rate, everything is on track, working very well for us. Past results are not necessarily indicative of future results, and I hope you'll subscribe. And by the way, we have a new website at criticalpoint.pod.com. This website here is the old site that we're currently using to deliver our podcast, free and premium service. This site at criticalpointpod.com is for information, education, a bio about myself and my modeling, a blog, whatever else we can put up. It's still in development. and I think you should check it out if you're not a subscriber. And there are links on the homepage to take you to how to buy that premium service and take you over to the podcast site. Thank you for your time and consideration. Have a great day.